Hi, I'm Sandy Ray, founder of Sandra E. Ray CPA, where we alleviate financial headaches so that you can create a bigger impact. Today, we're talking about accounting for pledged gifts. A great fundraising strategy is to get commitments from donors for gifts in the future. In the accounting world, we call this pledges. And pledges can take many forms. They can be conditional or unconditional. It can be a lump sum for some future payment, or it can be a series of payments. The form of the pledge can be a pledge card that somebody fills out, just saying what their commitment is. It could be a verbal commitment. It might even be a legal document like a trust or a will. But it's always going to be for some payment in the future. So today we are discussing when and how to record these pledged gifts. And there's a couple of pitfalls that we need to look out for. According to the US generally accepted accounting standards, there's some very specific conditions on when and how to record these gifts in our financial records. And the first hurdle is this gift legally enforceable and identifiable? And when I say legally enforceable, I don't mean that we're actually going to take action against a donor, any legal action if they don't fulfill their commitment. It's just, would an attorney look at this and say, yes, it's legally enforceable? So generally that means the document is in writing and that the document itself can't be changed. Also, there's generally an unconditional promise to give or not a lot of significant barriers in order to meet the conditions of the gift. So if somebody's saying, I want to contribute to a program that you already have existing, that's not a barrier, a difficult barrier for you to achieve in order for them to provide the gift. Now, if this gift is not legally enforceable, say it's a verbal commitment, or maybe it's a will that can be changed at any point in time, and you don't actually even have a copy of it, those are not legally enforceable or identifiable. And we would not be recording these in our financial statements, in our general ledger. But we still need to track these gifts because we don't want to forget about them. We want to anticipate them, and maybe some point in the future, they would become legally enforceable. But as time goes on, especially longer amounts of time, like wills, if somebody states they've made you the beneficiary of their will, you're going to want to track that to make sure that the organization is aware of that gift and that it might be coming to your organization at some point in the future. Now, if we do have a legally enforceable gift, it's identifiable, we're going to recognize that in our financial statements. And we're going to be doing that by recognizing the revenue, generally in a pledged gift revenue account, and recording a receivable, something like unconditional pledges receivable or pledges receivable. And we're just going to have that pledges receivable sitting on our statement of financial position, and we're going to record the revenue when the gift is legally enforceable. So if we get a pledge card today for a gift from 5 years from now, we're recording that in this year's financial statements, but we're setting up the receivable. Now we have to be able to measure what amount do we put on our financial statements. And generally part of that identifiable process is going to tell us, is it $100 for 5 years? Is it $5,000 in one lump sum in 5 years? Those are things that we can measure. But because these gifts are for some time in the future, and our financial statements are required to be at fair market value, we're going to have to apply a present value calculation to these gifts so that we can record them at today's dollars and not the dollars in the future. So generally, you're going to have a present value calculation, and you're going to be discounting those gifts. So if it's $100 in the future, maybe it's $80 to $95 today. Those are the kinds of things that we're going to be looking at and actually recording the present value of those gifts. The other thing we have to think about is while our donors have every intention of fulfilling on their commitments to us, something may happen. They may forget. Their financial situation may change. A multitude of things can happen, and they will not be able to fulfill their promise. So we need to set up an allowance for doubtful or uncollectible pledges. And we can do this. It's going to be an estimate. We're going to apply that estimate in this year's dollars. And we're going to base that estimate either on past history or some other reasonable method of calculating that estimate. And again, it's an estimate. We're going to be recording an allowance for uncollectible pledges. That is going to reduce our receivable on the statement of financial position. And we're probably going to be recording a reduction of our revenue in the revenue section. You may put it in the expense. It makes more sense to me to put it in the revenue section of your statement of activities and call it discount for uncollectible pledges. And that is how we're going to record those allowance accounts. Now, just like our present value calculation, we're going to be looking at this estimate at the end of every year. So as we get closer to the actual date of receiving the gift, our information is going to get better. Maybe they paid early. Maybe they've given all kinds of gifts in addition to that. So our confidence is for the collectibility is higher. Whatever may change, we look at these estimates at the end of every year and make those adjusting journal entries accordingly. And I like to keep all of these in separate accounts, whether it's be your uncollectibles or your present value discounts, because as we're updating these at the end of every year, it's easier to track what we've done if it's in a separate account and not mixed up with everything. And we can consolidate those accounts for financial reporting for our board of directors or on our 990, but it's easier to keep them separate internally so that we can track what we're doing. Now, in addition to recording them on the financial statements, we have to keep track within the financial statements of their classification. Many of these gifts are going to be unrestricted. That means there's no conditions that apply. Some of these gifts are going to be restricted, meaning that what the donor has stipulated the use of the gift. Now, this can be temporarily, which means that the donor has a stated purpose, or through the passage of time, the restriction is going to be lifted. So we have a temporary restriction, or the donor can say this is permanently restricted for like an endowment or a quasi endowment, where the actual gift can never be spent. But the investment earnings on that gift can be spent for a specific purpose or just for general operations, depending on how the gift is set up. So not only are we looking at the amount, but we're looking at the classifications as well. It's unrestricted, temporarily restricted, or permanently restricted. And then finally, when we do our financial statements, there's some disclosures that we are required to report, generally in the notes to the financial statements. And that we're going to discuss the nature of these pledges. You know, was there a fundraising campaign for the endowment fund? And all of these pledges are going to be received and deposited into the endowment fund. Just a perfect example of that. The amount of the pledges. Are there any restrictions on those pledges? What was our allowance? How did we come up with our allowance for doubtful accounts? And how did we calculate our net present value? Like what discount rate did we use? Those kinds of pieces of information need to be included in the disclosures. So that's the way to record this in our financial statements, and some things to watch out for. You know, we've got present value, those kinds of things. So whether these gifts for in the future, these pledges are legally enforceable or not, pledged gifts are a wonderful way to raise money for your organization. The trick is to make sure that you're tracking them. and maybe even sending out reminders from time to time to the donors that they've made these pledges. And if these pledges meet the requirements of recording in the financial statements, which is legally enforceable, identifiable, make sure that you're recording them in the revenue and the receivables, net of present value discounts, net of allowance for doubtful accounts, and in the proper classification, unrestricted or restricted. I hope that this was helpful for you today, and thank you for joining me. And remember, creating a bigger impact starts with stopping the nonsense. If you're dealing with nonsense in your nonprofit organization, we'd love to help you cut through the noise.